Hey,
Yep.
listen, we're going to be talking about getting your kids into the property market. That's correct, Blake, isn't it?
Yeah, that's
So,
right, Jenny. I mean,
well,
go
okay,
on.
I just want to ask you, how can parents help their kids get into the property market? Because, it's a little bit tight these days.
Yeah, I think you and me, Jenny, every week nearly make a comment on the Sydney property prices. And it was only a while ago where I said, we're at all-time highs in regards to property growth at the moment in Sydney. So how do our kids or how do young people get into the market? So a recent study released revealed parents are worried about the high housing costs in major cities and whether their children would ever even be able to buy in those cities. And I hear those comments all the time. How can people do it today? How will our kids get in? So the idea of helping your kids succeed in life is strongly ingrained in Australians, and buying their first house is acknowledged as probably the first step. So here are some tips to help your kids. And there's a couple ways, Jenny, we can do things. You can give them money. If you have the resources, you can take money out of the bank and give it to your child for the house deposit. The strings attached are up to you. If you do give money for a house deposit, the lender or bank will usually want a statement that the money does not have to be repaid. If you're borrowing usually over 85 to 90% of the value of a property, then the lender might also want 5% genuine savings. So they do want to see that the kids have saved themselves, mainly if you're borrowing over 90%. And if you can show savings histories, or if the gift is enough to buy a property, hopefully with future property prices, the value rises, your child can refinance, get money back out, and perhaps in the future make a gift back to you. So gifting's one option. Co-borrowing's another. If the home loan's too much for your child to enter by themselves, particularly based on their income, you could consider becoming a co-borrower with them. So this is a joint arrangement, which means you're also liable as the parent for repaying the whole mortgage. You have to pay it all, not just your half, if anything does happen to the child's or other party's income. The benefit, though, is that you're actually also a co-owner of the property, and the percentage is up to you. So you could also benefit from future capital gains. And the third tip is to look into going guarantor. If you have sufficient equity in a current property, you can go guarantor. Or as some people refer to it, a family guarantee, as lots of lenders restrict it to just family members. This means that the child doesn't have to have a deposit, but they get the loan based on the security. You're on the hook as well for the guarantee amount, only until that mortgage is discharged. So again, with property prices increasing and hopefully the child paying down debt, that mortgage can be reviewed to check future equity and release a guarantor. So if you're considering being a guarantor, remember that you gain no property rights from the guarantee, and it could limit your ability to borrow in the future. So there are three things: gift, guarantor, or co-borrow that people can look into to help their kids, Jenny.
No, that's fantastic. That's really good of you, Blake, because I know it's very scary, and we have 3 children of our own, and we just all want to stay close, in the same sort of area, basically. Getting throwback here.
Very important.
But it's hard for them. They want to better with their studies and go to university and all the rest, but they need to be there most of the time, so it doesn't give them much chance in the working environment to earn the bucks to save them, basically. But, my friend, is there anything else you'd like to further on that topic? Have you touched everything?
I'll say one tip like anything.
Yep.
If you're planning to help your child into the property market in the future, the earlier you start your plan, like anything, the better. The sooner you seek expert advice and start a plan to reach your goals, we've got the benefit on our side of compound interest. The sooner you start, the more sooner you'll have a bigger deposit. So an important thing is to, if even before you start having kids, if that's going to be a goal of yours, start saving for it now. I like with my kids, they're young as 9 to 2. So the ones that can get pocket money, I like teaching them savings as well as soon as possible. So if you involve your child in your savings goal of helping them get into a property, invite their savings, invite them to invest and also put any spare cash that they have from the moment they get a job, or even little bits of pocket money, into the larger amount for the big goal in the future. And the sooner we teach our kids these savings tips, the sooner we've sort of, it's our role to teach them, and we've invested into their future as well as helping them out with where we can in the property market.
No, that's great. That's really good of you, Blake. And also, with next week's topic, it's quite interesting because you're wanting to talk about preparing for tax time and mortgage tips.
Well, the dreaded tax time. That's right, Jenny. I thought I'd get in early, and I think as we lead up to tax time, there's going to be a couple of topics I'll bring up. But if you want to look into mortgage tips, the sooner you take action on preparing your mortgage to be best optimised for tax, the better. So we're getting towards the tax time. It's scary for some, but with the right information, we can make some good decisions.
No, that's brilliant, Blake. And we'll be talking next week to Blake Chandler from Yellow Brick Road at around 10:15, 10:20 next Wednesday. And thank you very much, Blake.
Thanks, Jenny. Speak to you next time.
Yep, definitely. You have a great day. Bye for now. Bye-bye. And that was Blake Chandler, Yellow Brick Road.